All right, everyone. Happy Sunday or Monday, wherever you may be in the world. Thank you so much for joining in, and we are excited to go over some interesting charts and some different features on TrendSpider today. So, as always, with the new kind of show format, we do have these 4 segments. The first segment and the second segment, we're really going to have Peter Hegedus, who's our guest today, go over some of the top trades in the market, as well as finding an edge using TrendSpider in today's market. Third segment is going to be focusing on the broad market recap, looking at some of the monthly charts on my end, and then Peter is going to be looking at some charts on the lower time frame, such as the daily and that type of thing. Fourth segment is going to be the top 3 weekend charts requested, which are Tesla, GE, and BA this week. So we've got Tesla, GE, and then Boeing, which is BA ticker. So without further ado, I'm going to introduce Peter Hegedus. Thank you so much for joining, and I will hand it off to you to take over segment 1.
All right. Thank you, Jake. Thank you. I'm very excited to be here, and I think we should have a lot of fun tonight. There's certainly not been a boring market as of late.
No, zero boring.
Let me go ahead and get right to some charts here. Before I go too far with the charts here, I do want to just mention one thing that I think is super important in all these trade reviews we're talking about. Every single one of these trades, at my company, we have a chat room, and we are really kind of stressing to everyone, it is critical right now that when you have a market that's making moves like you see here, where stocks are moving $10, $15, $20 a share, or even the SPY is doing that, it's really critical to be trading in small position size. So, I do want to say, as we do this trade review and we talk later about finding an edge, just can't stress enough to everyone out there, especially if you're a newer trader, but even the most experienced traders, position size is just so critical right now.
Absolutely.
If you're a trader who's used to taking a $1,000 position size, and the most you want to lose on a trade is $100, and you set a 10% stop loss, and this volatility, you're going to get stopped out of every trade. Whatever your normal position size is, you have to dial it back, and you have to allow some room for the trades to work. So just wanted to say that. I think it's really important for everyone to hear. I know people are probably struggling with this volatility, and it's really critical to success right now. So let's go ahead and get into some trade review here and talk about some trades that worked very well for me and for our members. But what's really interesting about all of these trades is these are trades I would not have taken without some of the volume features that TrendSpider offers. Every single one of them was informed by some sort of volume feature that you guys have, which is so fantastic. And it's really changed my trading in a good way. And it's been critical to navigating this market.
Awesome.
So,
good to hear.
Yeah, the first one I want to talk about is Facebook. So Facebook is a name, like so many others, that's going through this, massive pullback. It eventually put in a bounce here. And I started looking at this chart thinking to myself, wow, this has made a big move down. It's getting a bounce. I still probably think there's going to be potentially more to this downtrend. I think it's a name that a lot of people are misreading. They think it's a stay-at-home. It didn't take me long to say virus, only 4 minutes, right? They think it's a stay-at-home virus play. But fundamentally, they count on advertising revenue. And advertising budgets are going to be the very first thing that companies slash as the market softens and as the economy softens. So I started looking at this and saying, boy, is there an opportunity here to get short? And you can see I've got a number of moving averages that I use. I've got an EMA 3, an EMA 8, SMA 20, 200 up here, the 50. And I said, boy, where do I want to get short here? And at the time I started watching it, the 20 was way back up here. And I said, is there any other opportunity for me? So one of the really interesting things I found when looking for support and resistance is to watch volume. And not just the volume that I have here down on the bottom of the chart, but to look at things like VWAP, and in particular, I just love the anchored VWAP feature you guys have. So I've noticed on a bunch of charts as I've been scanning the last few weekends for my setups for the week that this date right here, March 3rd, has been a really critical one for anchored VWAP, right? So most stocks topped out, somewhere in here, or, Facebook, I think, topped out a little sooner, or somewhere in here. But we had this big pullback, and then we had this bounce, and then so many stocks, the top of that bounce, which was really the only kind of multi-day bounce until we came all the way down here, was this March 3rd date. So I started looking at Facebook, and if I go ahead and turn this on, you can see I decided to look at an anchored VWAP from this March 3rd date. And I said, as I started watching it kind of down in here, boy, if I get within, a buck or two of that anchored VWAP, I think there's a really nice short opportunity in that trade. And it's telling me something that all these other moving averages weren't, which I think was fantastic. So we actually, I'd alerted a trade in our room on the 24th, very near the close. This looked super strong, but I knew that resistance was sitting right above. Went in, and again, small position size so critical, went in half of a small position size, saying that if we do gap up, that I can probably add to that right at anchored VWAP and go down. But as you can see, this was a really quick overnight winner for us. We went right down, pushed down, and made about a 50% win on Facebook puts for all of our members, which was just fantastic.
Beautiful.
And the beauty of it was, it gave us not just one opportunity this past week, it gave us a whole second opportunity. So on Thursday, Facebook pushed up, went over anchored VWAP. Now we almost got faked out a little bit, because I don't want to take it way above there with a close above, but it went up above anchored VWAP, then pulled below, and then we had that really strange last 5-10 minutes on Thursday where everything pushed up. So it ended up closing above, but sure enough, it gave us about another 50% winner with puts Thursday overnight into Friday. And I just thought it was just such a textbook example of a trade I never would have found that resistance level without that anchored VWAP there, which was just absolutely fantastic.
Yes,
So,
no, it's a game changer. Absolutely. Before we brought it onto the platform, I never used it either. And then it's like, whoa, things like
yeah,
that.
I'll be perfectly honest. I never heard of it until you guys turned me onto it, and I'm like, wow, there's something to this. I mean, I was watching your tweets with anchored VWAP levels, and I'm like, boy, I got to dig into this. And it's just been a game changer for my trading, and in a really good way. So I'm super excited about it, and this will still be on watch for me this week. You've got that 20 coming down, which is going to be a resistance area. You still have that anchored VWAP there. So something I've already traded twice, and never opposed to going back to that well until it proves otherwise.
Yeah, I love it. Yep. No, absolutely. Now, so Facebook was an anchored VWAP. Are some of the other ones that you did some trades on, are these also a function of that, or are they also a different volume type of trade?
I'm using all sorts of different volume tools. So the next one is pretty interesting. It's actually using two different volume tools together. And that next one is, I'm just going to switch to another workspace here because I have it all set up there, is Peloton. And Peloton, there we go, has a couple interesting things happening here. So I used two different volume tools here to inform my trade. I used an anchored VWAP to the low of this pullback here on March 16th. And you can see that pushed up, actually hit another anchored VWAP, but more importantly to me, it just hit this anchored volume by price supply, and that's anchored to the high from February 4th. So we had this case where we pushed up off a low, and then all of a sudden you got these great big wicks. Why? Because using anchored volume by price, I was able to realize this was overhead supply. Right. So people who, got long in here and then it pulled back on them, they were using this to get out of the trade because they got that little pop. So that was really when I first started paying attention to it, when I noticed these wicks and I did this anchored volume by price study, found the anchored VWAP and said, boy, if that comes back to anchored VWAP and either holds or comes back up through, there's a great trade opportunity from the 24-24.50 area all the way back up to the 27 to 28 area. So this is one our members probably literally traded every day this week.
Right.
Going back to Monday, it pushed up through. Tuesday, it opened above, back tested and held. We got a nice day trade there. Same on Wednesday. And then on Wednesday, I actually took a swing that I'm still holding here that hopefully will work out into Monday. If the I haven't looked at the futures here at 6:11, but who knows what we get for an open tomorrow. But
It's we've had a little bit of back and forth from, because for a while there, we were gapping down in futures, and then the next day we were continuing that just sell off. It seems like recently we've had a little more kind of reversals in the futures versus actual trading hours. So it'll be interesting to see if that pattern continues this week.
Yeah, and there's some interesting things happening with the market. When we get to our market review, we can talk about too. So
Right.
that was the Peloton trade. I think it was just really good example of using anchored VWAP as support and then anchored volume by price as a target for your trade to say, boy, I probably want to get out here as I get into that overhead supply.
Yep. Beautiful.
And then the last trade I want to look at is the SPY. This one was from a couple weeks ago, but it's really interesting, and talks about one of the things that really first turned me on to TrendSpider, which is raindrops.
Nice.
So we look at this candle here on March 13th on the SPY, and I think this is a candle that sucked in a lot of bulls. And if I were only looking at standard candles, I have to say I may have been somewhat interested in that bounce, or certainly wouldn't have bet against it. Right? We've got this open here. We've got a big push down. We made a slightly higher low than that previous really ugly day, and we pushed all the way back up and had a pretty near high of day close. So everything there, looking at your standard candle, says, boy, that's not bad, right? But if I take this and look at a raindrop, look what I see all of a sudden here. I've got all sorts of volume down here. My volume the second half of the day is slightly higher, slightly higher than what I got in the first half of the day. But look at all the stuff up here. There was just no volume up by those highs.
Zero.
So, yep. So I took a look at that late in the day as we were looking at a high day close. I said, boy, I want to take a look at the raindrop here. And the way the day was shaping up, I thought I would see something very different. And was actually considering maybe taking a couple calls overnight. And then as soon as I saw this raindrop, I said, boy, that's a bull trap, and that's a perfect setup, an absolute perfect setup to take some puts over the weekend. And where again, this is the environment we're in right now. Weekends are becoming very, very tough again, because it's now 2 days of bad news that can pile up.
Yeah.
Uh,
Well,
so
it's
unfortunate that's the market situation we're in today. And we alerted a trade about 3:45 on Friday afternoon in SPY puts, and man, our members were loving us on Monday morning.
nice. And so it seems like you are using that strategy where you're looking at these raindrops within the last 20, 15 minutes of the day, so you can kind of get an idea before the close really where that volume's at.
Yep, absolutely. So I see things as I kind of scan, thinking about the next day, um, and take a look at the raindrop on the stuff that's really interesting to see, hey, does this either confirm a bullish or bearish thesis, or does it tell me a completely surprising story? And in this case, it was a completely surprising story.
Yep, those are some of my favorite ones to look at into the last half of the day, or the last really 15, 20 minutes of the day, because you can really get an idea of, all right, you know price is one thing, but actual conviction with volume is a totally different thing. And so these give you that view of, all right, well, somebody pushed this up, but they pushed it up on pretty much no volume at all. And so that can really be a pretty big, indicator of what's coming. And I'll have a couple other examples of that. But as we go on to our next segment, segment two, if you want to go ahead and stop sharing your screen, we'll
Okay.
jump into pretty much what we've already been going over, what you just kind of went over, which is essentially how are you finding an edge in this market and what are you doing to kind of do that. And so you mentioned a few different things. I want to highlight a couple of these. Some of the anchored tools that Peter has gone over, anchored volume by price, anchored VWAP, all of these you really want to anchor from a point in time that's kind of the status quo changer. So in this case, I do have an example of Google here over the weekend that I created, I think today actually. And the reason why I anchored the volume by price and the volume weighted average price from this candle with the circle on it is essentially because that was our breakout candle. And you can see that was truly the breakout candle because we came back and retested that area and actually found support there. So that's where kind of what I would call the status quo of Google kind of changed at that point. And you'll see here, since that point in time, price really has respected both the anchored VWAP, but also you can see how much volume has been holding from around, let's say, 1,000 to 1,200, and that really helped price kind of stop accelerating as quickly as some of the other ones out there. Notice when we first kind of started this move at around 1,500, there was not a lot of volume supporting price up here. And so that was a reason why we were able to move down so fast. So once again, raindrops, Peter mentioned that he definitely uses these into the last part of the trading hour, wherever you are, time zone. That's about 3 o'clock Eastern. That's about 1 o'clock Mountain Time for me. And what I look for is I'm generally looking for these raindrop setups over or around a breakout or breakdown zone. So essentially, I'm looking for these areas where volume is above a trend line or volume is above the VWAP. That's kind of confirming something that maybe I'm not seeing on the hollow candle. And then to kind of put all this together, you need to know when you buy or sell. The analysis is one thing, but then on top of that, you also need to know when to do this. And that's where the alert system comes in to complement all of these different features. So you can create alerts on trend lines, moving averages, anchored VWAPs. Let's say that you've identified a demand zone, like I did in this static image I have here on the presentation. You'll see that there's a lot of volume in this area, and I could essentially just highlight that with a horizontal line here, a horizontal line there, and I can create an alert on each one. So to hand it back over to you, Peter, do you have a couple other examples that we could go over that kind of highlight some of the main tools on the platform that give you an edge?
Absolutely. I have a couple of charts I'm actually going to be watching this week. And I'll talk about some of the TrendSpider features that I'm using that I think will show you some really interesting stuff as far as getting that edge and getting great entries on a trade if they set up. So let me go ahead and get my screen up. And we will start by taking a look at DocU.
All righty.
Or we're going to try to here. There we go. All right, so this is another one, very much like Facebook. It doesn't really show me a great, compelling story necessarily on its own. But if I add in anchored volume, anchored VWAP in this case, and to your point, you want to look for key highs, key lows to anchor your VWAP to, right? You don't want to just pick some random candle. So in this case, I put an anchored VWAP on this high back here from February 19th, and you can see how this was resistance here. This big wick above turns down. It was resistance, and then it broke through, pushed up, and has now held as support. Also happen to have that SMA 20 there, which is very nice. And we also happen to have, this is one you guys were kind enough to put on for me, a very positive looking TTM momentum indicator down here on the TTM squeeze indicator. We don't have a squeeze, but we have very positive momentum there. So this is one I'll be watching this week. And what I'm likely to do, unfortunately, although I saw this on Friday, and I think you saw my tweet on this, Jake, unfortunately, I didn't get my entry, but I'm going to set an alert here on this line so that if we get a touch of that, or really anywhere, I'm going to set it to about 50 cents off of there, and then use a 10-minute confirmation candle. And I'm going to keep that probably for the week. So I'm just going to set it for 5 days and set it to trigger a few times and go ahead and create an alert. So now, the beauty of this is if I take my eyes off DocU, I don't have to sit around and wonder when it's going to hit anchored VWAP. I'm going to get an alert when it hits and holds anchored VWAP. I'm not interested if it breaks through and goes down below, but I'm very interested if it gives me this kind of action where there's a little tiny, quick dip below and then it closes back above.
Beautiful. And that DocU seems to be one that's really holding its own over this last month or so.
Yeah, and again, this is one, it's an unavoidable topic these days. This is a stay at home or don't meet with your business partner type play right now.
Yep.
This is a company that I actually just use signing some business documents where you can sign documents without actually having to touch a piece of paper or get together with anyone. They send it to you, you sign it electronically, and you're good to go. So that's kind of an unrelated technical thing that we're also we've been doing in our room to try to find an edge is try to find stocks that make sense if things continue to be difficult and volatile as far as the current geopolitical situation we're in.
Yep. So are you guys really looking for kind of relative strength against the overall market? Just kind of things that are probably not going to absolutely sell off more because it's needed. And it's not necessarily that stocks that are doing well during this time can't sell off because you may have someone who's got a huge position who gets liquidated somewhere else. But for the most part, it seems that, these stocks that are holding their own are ones that are having relative strength against the markets and actually have some type of relevant use if we did continue, as you mentioned, for X time period that we kind of have to stay indoors.
Yeah, absolutely. And just going back to the Peloton trade, that's one I'm still watching. Why?
Doesn't want to exercise, but you can't do it at a gym.
Well, right. It's certainly a stay-at-home play, but it's also pretty interesting. I mean, look at how close it was to a high of day close. Now, granted, it's up against that. In that case, that's an anchored VWAP from the high I have there, but so close to a high day close when the SPY just and the whole broad market was selling off hard on Friday afternoon. So, relative strength is certainly another thing we're looking for, and something that's been moving up much stronger than the market. And again, a stay-at-home play.
Love it. Love it. Well, should we jump into some broad market charts? Or do you have one more example?
I can show you one more. It's pretty interesting. Or actually, if we have time, tell me if we don't. But I can show you two real.
Yeah, we got time, so please.
Okay, cool. I can show you two real quick here.
Yes.
So here is Clorox. Again, something related to the virus, right? None of us can find Clorox wipes. We're all finding new ways to manage our lives. Like when I go to the store now, I need to come home and wipe everything I take out of the package. And I was kind of joking on Twitter this weekend that I was money laundering because I cleaned my credit cards and my wallet too.
Oh, it's funny. I haven't left my house in a hot minute, so I feel like Clorox would work. But at this point, I'm hoping that this house, after my wife's cleaned it 5 times and she's just so bored that there's no other germs here that are good.
Yeah, exactly, right? Hopefully there's no more of those. So let me get my anchored volume by price to the right spot here.
Oh, beautiful.
So look what happens here. We had this big push up, kind of a huge short squeeze in Clorox, if you can believe that. Big pullback, but look what happened here. If I have the volume by price anchored to a low, right? This was kind of a pretty good low point for Clorox.
Mhm.
And look at all that volume there. So all that volume now is starting to build a base of support. And you have a little bit of resistance, technical resistance above the EMA 8 and the SMA 20. But as long as this area continues to hold, you've got a lot of room up to your next anchored VWAP, which is off the high. And just a good example too of finding an edge. If you can get a combination of a volume indicator off a key recent low or a key historical low, and then another one off the recent high, you have a really good idea. This is someplace I'd be in technical no man's land as far as trying to pick a target.
Mhm.
But you add anchored VWAP into the mix, and now I know, boy, if I can get an entry, either right off the support on a pullback that holds in this volume area here, like 167 to 168, or even on the break of 174, which is the SMA 20, I've got room clear up to around 180, 181, which I'll take a $5-6 win all day long on some Clorox options.
Absolutely. Have you noticed? Because I know you trade options a lot. Have you noticed like any difference in the pricing of the premiums here, or is it kind of across the board, just absolutely?
Yeah, that's a good, really good observation. Premiums are really high, and that's just a factor of how high the VIX is. And although I'm trading in both directions, I can tell you this: if you get a short trade that's working in your favor, that goes down with the market while the VIX is rising, you can get some killer percentage returns right now because your IV is going up as the market and your stock, your underlying stock price is going down, and your puts just kill it right now. For long setups, you have to be really convinced that you're going to get a great move because you're losing in general as long as the VIX, although the VIX is kind of funny this week, it didn't necessarily do what was expected. But if you get the market rising and you're just rising, rising with the tide, but the VIX is pulling back, you're losing IV, so you're not getting as good of a return that way.
That makes sense. Love that. Yeah, no, I've honestly started trading a little more common stock just because as much as I trade options, I don't have enough experience to really dive into the Greeks like, that I was able to trade when the market's not in crazy volatility mode. It's a little easier to understand, okay, the price goes up, the option goes up. But right now, you really have to actually pay attention to the VIX right now to be able to have a little bit of an edge on the options pricing side and all
Yeah,
that.
absolutely. And the other thing that's been challenging with options is the liquidity's been really tough.
Mhm.
And not so much the volume or open interest, but just the liquidity as far as the spreads. And it's we're in an environment now where it's really tough to make any options trades until about 10 o'clock in the morning because it takes a good half hour for bids and asks to come together.
Mhm.
So it's been pretty cool for us. My partner, the co-founder of the Traders Path, he's pretty much primarily an equity trader. I'm pretty much primarily an options trader. So he's been super active, just doing quick day trades at the open from like 9:35 till about 10:30, and then I'm kind of stepping in at 10:30 with the options trades.
Perfect. Well, yeah, no, that's it's been interesting to see even people that we follow on Twitter have kind of even gone from trading options to trading stock just because of that reason. The spreads are so big.
Yep.
Um, the only way to even really trade options right now, from my experience, is literally to just set a limit price and you get taken out on the liquidity spike up. If you try to like limit order while all of this is going on, when you're trying to get out, you're just going to be constantly changing your limit order constantly because it's just moving so quickly. You have to define
Yep.
your upside target, put the limit in, and just hope somebody knocks it with some liquidity up to the upside.
Absolutely, which makes these volume tools so important because so many of my trades, I'm actually just waiting for it to come down to anchored VWAP or waiting for it to come down to the anchored volume by price support, and I'm putting a bid in well below the current bid, just waiting for it to come down to me. And then if it doesn't work out, goes the wrong way, stop out. But if it does, you can get some really nice moves up.
Love it, love it. Well, kind of moving into the next segment with the broad markets. And really looking at the VIX, I definitely want to check out the VIX right now just because it's so, it's really just so interesting to see when you go back in history and you really start to look at the VIX and the SPY. A lot of people like to say, the SPY and the VIX are completely correlated. Anytime the SPY is going down, the VIX has to go up. And we'll look at a couple examples here shortly of why that's not always the case. So key notes into this segment 3. First of all, the monthly candle ends this week, so that's huge. We only have 2 days left in the trading month. So technically, as you guys can see on my chart here, I'm going to make this bigger in a second. But, we do have pretty much the monthly candle played out. I mean, that's a lie. We don't have the monthly candle played out, especially with the volatility right now. But you can have a general idea of what the range is, where the candle has been, and then you can kind of start looking from there. So I mentioned the monthly candle closes on Tuesday, but also, the weekly charts are important to look at as well. We'll have either Peter or myself do that. I think Peter's going to look at the daily, so we'll check out a couple of the weeklies as well. And then from a different ETF perspective, this is SPY, but looking at the Qs, we actually held support really nicely over the last, let's say, 2 weeks or so. So you'll see here, when I go to the SPY, we've got the same chart that I just had up. And what's really interesting about this monthly chart is what I did was this weekend, I looked at when the VIX topped, and then I looked at what that month was, and then I highlighted that month as the monthly candle on SPY. So you can see here, July of 2002 is when we actually topped out on VIX, but then you can see we actually continued down for about 2 more months and dropped another 16%. So just because the VIX tops out does not mean that the market can't go down more. Here's another example of October of 2008 when we topped out on the VIX. But notice that we continued to drop for quite a few more months, and we dropped another 30% from when the VIX topped out. So and the reason I'm bringing this up is because I've seen a lot of people mention, what's the VIX doing? Because then we know what the SPY is doing. That's not always the case when we get these wacky moves where the VIX is kind of, I'm not saying that's completely topped out, but I wouldn't necessarily make it a function of higher VIX, lower SPY. You can have a lower SPY and a lower high than what we had, even this past month. So just want to make that clear that, the VIX and SPY generally are moving together, but there are some variables in that equation that do make these kind of weird, kind of lower lows in SPY, but lower highs in VIX type moves. The second part of this that I want to mention is the fact that if we really look at these 3 different breakdowns, you can see that we broke down in September of 2001 through this long-term support. You can see that we broke down in January of 2008 through this long-term support. And these long-term support lines are simply a function of me connecting the wick at the very bottom of this trend and then connecting the next wick that has an extreme downward move. And you'll see over time, when we finally broke that long-term support, that's when things start to get interesting. That's what I kind of like to call these support trend lines, essentially the bubble line. Whenever the price broke down through this line, that's when the bubble burst. Same thing here. So you can see we broke down, had a couple months of continued upside before finding resistance at this previous support both times here, and then had your next leg down. So we've got the first kind of step in the process, if you will. We've got this wick finally breaking through this long-term support, but you can see that we bounced pretty hard from that area. And so what you'll see here is, notice that the price bounced right above where we've got all of this volume holding since this March 2009 low. We didn't necessarily get right to it, but notice how we did start to kind of enter that zone of kind of more of a demand zone here. So we bounced kind of right at this candle, and then notice that we actually moved up very quickly through this area from around 220 to 235 because there just wasn't a lot of volume holding there. We did find a little resistance around the 244, 245 area before continuing up through this volume gap and then trying to retest this previous Alpha Trends anchored VWAP. We'll anchor it from here. You'll see that we're almost right at that close. Moving on to a different chart, we'll look at QQQ, and you'll see something that's really interesting. Notice how we've actually held pretty well. Oops, turned on the MACD when I meant to turn off the volume by price. Notice that we've really actually held pretty well in this broadening formation here. What you can see is I've essentially created a support line. The primary support line here is just a wick. So I connected this wick right here to this wick right here, and then that's just a ray. Then what I did was I created a trend line from this body here to this body here, and notice we've got our second kind of midline here. And so notice our extremes have really respected the trend line support, and then our kind of bodies and our closing areas have really respected this mid support line very nicely as well. So that's what we can look at on the Qs. It's really interesting to see that the Qs have not taken as big of a hit as SPY over this whole time. But you also have to remember that tech is a lot more flexible and a lot more kind of nimble during these types of times. So that is something to definitely keep in mind. On the monthly chart, this is a really interesting fact of the week. We closed at around 59.80 in October of 2008. We have 2 days left on the monthly chart. And if we close above this 59.80s area, this is going to be the highest monthly VIX close ever. We're currently about 10% above the current price of the highest close in 2008. So, it'll be interesting to see if we pull back or if we hold this area. We'll just have to see what happens, have to see how much of this bad news is already baked into the market. And then the last chart that I want to show before I hand it back over to Peter to take a look at some of these charts is XBI. XBI is one of those interesting ones where we've actually broken down through this longer term symmetrical wet triangle here. But if we go to the weekly chart, you'll see that we've held some really strong areas of confluence. And this is actually an example of a trend line that I didn't even see. I turned on the trends feature and I was able to see this particular line here. This was a big area of support, another big area of support, another big area, and then we've got another bounce here. So notice that this is in confluence with this previous double bottom area or not previous double bottom, but this previous area that we bottomed out in 2018. And we literally bounced right off that area with this week having a higher low than last week. So it's always important to look at confluence, whether that's confluence between trend lines, confluence between a moving average and anchored VWAP, or all of the above. I also like to use Fibonacci levels as well as a nice confluence area for support or resistance. So those are really the main things that I wanted to go over for the broad markets. One thing that I did forget before I hand it over to Peter, this was really supposed to be part of the segment, finding an edge. And I wanted to go over a real life example that I traded this week on GE using the anchored volume by price and the anchored volume weighted average price. So what we have here is we've got the 65-minute candle. You'll see that I anchored the volume by price from this anchor point on March 3rd. And essentially, I anchored it from this point because you can see we were in a downtrend. We had a little bit of a dead cat bounce. And then this candle was our kind of high of the dead cat bounce before continuing down and creating lower lows. So what you can see here is you can see that when the price was around 780, we were in what's called like this volume gap, where there's not a lot of supply above. And Peter mentioned this as well as his target. I think it was for DocuSign or a different one. But essentially, we're looking for that next level of supply above, because you have to think the price has been down as low as $6, $6.50 on GE. And let's say that you were the one that bought around $8.25. You just went through almost a 25% unrealized loss. So naturally, as the price starts to move up, you'll see what happens. The price moves up quickly because there's no supply here. And then you find resistance right at this target above, which is all of those people who have been holding at a loss forever. They finally break even and they're like, okay, I broke even. I'm out of this trade. Enough people do that. It adds enough supply to the equation that you actually start to get the price moving down. And you can see here, we topped out right at this point of control, or it was the point of control. Notice that, or sorry, it wasn't. It was never the point of control, but it was a very big block of volume. The point of control was down here, and the point of control is simply just the biggest volume bar in the sequence of the distribution bars. So here you can see hard rejection. We moved down from around 820 back down to 762, and you'll see what happens. You've got this demand zone that starts to form, and what's really interesting is, notice that demand zone was not there before. Notice that demand zone came in as the price pulled back. So that's telling us that buyers are coming in and adding to the amount of shares now held at the 760 area, which could possibly act as an area of support. But if we did break down that previous area of resistance, this alpha trends anchor VWAP is now going to be support below if we do continue down. So that is what I wanted to show. Peter, I will hand it off to you to mention a couple other things about the broad markets, and then we'll go into the last segment, which is the top charts into the next week.
All right. Thanks, Jake. Let me get my screen up here. All right. So the last one you finished with as far as the market was this biotech index here, the XBI, which I think is a pretty interesting one to watch in the coming days and weeks. So I had kind of two things I noticed here. I had this trend line drawn in.
Then sharing again, for some reason your screen's flashing.
Oh, let me stop and restart and see if we can.
A visual thing on the technical side. If you redo it, it should be good. But yeah, there's felt like I was in a EDM concert there for a second.
Sorry about that.
Should be good. Yep, we're good now.
Okay, cool. So a couple things here on the XBI real quick. I had this trend line drawn in from September as a resistance trend line. Also had the SMA 200 there. Got rejected. Actually bounced off one of your auto trend lines after that, and then came back up through this trend line, broke out, and look exactly where the XBI bounced, right off of these two trend lines here. So it looks like we've got some, potentially some pretty strong support there. A much bigger bounce than we're seeing in the general market. We did just fill a gap, and hit the 20, which means this may need to take a rest. But look what else we did. We moved up through anchored VWAP from that key March 3rd date. And for now, we'll see what happens tomorrow, but for now we're holding that. That would be pretty interesting if we were to continue to hold that and start to turn back up, especially when you consider, again here, biotech and biopharma are not going to be terribly affected by any sort of economic weakness going forward. I mean, people, sadly, people are still going to get sick, and probably right now, sadly, at much bigger numbers. But this is something I want to watch very closely over the next couple of weeks to see if it continues to show a little bit of relative strength to the other sectors out there.
And I've noticed too that you've got some confluence of support trend lines there, which is a cool example of what we just went over, where it's not just one area of support that caught a bid right around 65. It was actually two areas of support that kind of caught that. So just kind of the whole idea of confluence. If you've got multiple areas that are showing support, the more participants you have in the trade. So let's say that you just have support and the price just bounces off the support trend line. Those are your trend line participants. But then what if you've also got, the MACD crossing up? You've got participants coming in who play the MACD. So the more confluence that you have across the board, the stronger the move that it likely is.
Yep, absolutely. And then and if you have multiple support areas all coming together, it's great. Just, same thing and I didn't put any Fibonacci's on this, but same with when you have Fibonacci clusters, right? If you're looking at Fibonacci retracements, and then you're, from different moves, and you have a support or resistance area that's all lining up, it just makes it so much stronger. And especially in this volatility, if you have more than one reason to believe something is support or resistance or an entry point, it's just critical with the nature of the volatility of this market right now.
Yep,
Which
absolutely.
is a great segue to talk about the VIX.
Yes.
So let me turn my auto trend lines off here. So just, one point I want to make about the VIX, I saw a lot of folks the last couple of weeks saying, oh, the VIX is done, it's topped out. But if you look historically, and you can see, this looks like nothing moves, but these felt like huge moves back in August. The VIX always has a tendency historically to have what I call spikes and then aftershocks, right? And the spike is that first big multi-day move up where it comes from a relatively subdued place and makes a big move into higher volatility. Everything feels more difficult. You have a pullback, and then it's very normal to have this kind of very wicky looking, what I call an aftershock. And you can see this played out multiple times in the fall last year when we had all that trade talk going on, where we spiked, we aftershocked, we spiked, we pulled back, we aftershocked. You see it again here, and you see that you can go all the way back to the 2008 financial crisis, and I'm not going to go back that far, which was the last time we were this high, and you see the same thing play out. The VIX very rarely makes this type of huge thrust up and just makes a single peak and comes down. It tends to have, some sort of, less strong, but some sort of secondary thrust up before it finally decides it's time to ease. So that's just one thing I wanted add to, your comments on the VIX and volatility. You're absolutely dead on that. Very often, even when volatility starts to ease, it doesn't mean that we've hit a bottom. But I also think we're probably going to see sometime in the next week or two another, last gasp surge in volatility.
Yep. No, absolutely. And be interesting to see what the SPY does with that.
Yeah, absolutely, because they were doing their own thing this week. We had a
Yeah.
lot of days where the SPY was green and the VIX was green, or the SPY was red and the VIX was red. But that's a great segue here to get into the SPY. So a couple very interesting things I'm seeing on the daily. We broke out of a descending wedge. We had this, kind of nice first time in a while we've had a multi-day move up. But we came out of a descending wedge, and we very quickly came into this rather steep ascending wedge. And all I did here is I started watching on the 25th, where you had a wick to a wick, got respected on the upside there. Here you had a wick to roughly a wick here. And you can see on Thursday, we actually tested both sides of that wedge. We opened on the lower trend line. We tried to get out of the upper trend line and got rejected. And on Friday, it looks like we were starting to break out of that ascending wedge. So that's something I want to watch closely early this week to see if we continue to move out of that and maybe move down. The other thing is, we keep talking about this March 3rd, which was the kind of the high after the initial big sell-off. Look where we stalled on Thursday at the high of the week. We stalled right at anchored VWAP off that March 3rd candle. So for me right now, I'm keeping a very open mind. I think anything can happen, but until we can push through anchored VWAP and maybe take out that SMA 20 below, I would tend to lean towards we maybe haven't either found a bottom, or we maybe need to come down here and put in a higher low or make a double bottom or do something more constructive technically than just right now. This is nothing more than the beginnings of a potential V bounce, which I think we all got spoiled in December 2018.
Yep.
Because V bounces work out statistically about 5 to 10% of the time. without a retest. So
Yeah, it's even in August, we had a lot of these W's form, not necessarily these V's. So it actually is a little bit on the healthy side to kind of retest those lows are a little higher than the previous lows, just to kind of see if there's actually buyers there, if there's actually demand there, and from there we'll kind of see what happens. But from my experience, I'm not a huge fan of ascending wedges. So we'll see if it holds, or if it breaks down to retest some of those previous lows. I'm just curious, what does the anchored VWAP look like? What level is that from that capitulation 218 bottom?
So I've got I got a couple anchored VWAPs I'm looking at here. So I've got that one there. We can look at which one are you looking at? 218 you want to see?
Very
From the
bottom.
top?
Yeah, the capitulation candle at the very bottom. Yeah, right there. I'm just curious what you may have to scale your y-axis a little bit to.
Yeah, let me just do that.
So yeah, I mean, if
It's down around 240, 242, 243 area.
yeah, it'll be interesting to see if that holds, because if that doesn't hold, that's where it gets a little like, okay, let's see where this goes.
Yeah, you'd have that anchored VWAP there, and then you'd have candle, a lower wick around 240, and if that goes, boy, that gap is going to start acting like a magnet.
Yeah, and that's another thing I'm not a huge fan of right now is that gap below. We did have plenty of gaps that we never filled until the last month from over a year ago. So these gaps can stay open forever. It's not like a gap has to fill within 10 days, but it is interesting to see with a lot of uncertainty still out there, and what happens from here. That could be an area as a magnet, as Peter said, just kind of as that area everybody's watching. Maybe even become a self-fulfilling prophecy at some point.
Yeah, and one last point I'll make on the SPY before I turn it back to you here. This move up, keep in mind, we are coming into quarter's end, and there are a number of mutual funds out there that are required to keep a certain balance of bonds versus stocks.
Mm-hmm.
And bonds have gone up, stocks have gone down. What do they need to do? So just for example, if they have a 60% equity, 40% bonds in their fund, what do they need to be doing after this big pullback? They need to be buying into quarter ends to get their fund balanced at the end of the quarter. They don't have a choice. They have to buy stocks. So a lot of people are suggesting, and I tend to agree, that some of this move up in this wedge is forced buying.
Makes sense, and that's where you get that short-term imbalance and finally get some demand outpacing supply for that dead cat bounce. So we'll see what happens tomorrow, but we still do have segment 4, which is talking about just some of the charts that we see a lot of the time. Essentially requested, talked about. So I do want to go over Tesla, I want to go over GE, and then I want to go over Boeing. And I'm going to go over some charts really quickly. I'm going to hand it back over to Peter, and we'll pretty much be done for today. But what I want to do is I want to focus on that monthly candle, because we are pretty close to the month end. It doesn't necessarily mean that the monthly candle is going to look like it does today compared to what it will be on Tuesday, but we have a general idea of what it looks like. We only have 2 days left out of the X amount of trading days we had in March. And what's really interesting about this is kind of getting into the art of anchoring, if you will. And I got to admit, I didn't know anything. I didn't even know what anchoring meant until Brian Shannon taught me about it. And so anchoring can be useful not only in the volume by price, which I have here, but also in the volume weighted average price, which we've done multiple examples of here. And so what's really interesting about this is, we had this very, very, very defined ascending triangle forming here. And essentially, we finally had the breakout in 2013, and that's what really set the stage for this big move up that happened and continued into late 2014. And so what's interesting about this is if we anchored the volume by price from this, what I'd call a status quo changing candle, what's really interesting is since this candle, notice that, most of the volume was really focused around, let's say, 190 to around 360. So when we started really taking off here over the next 3 months and testing this almost $1,000 mark, if we anchor the volume by price from this point, you'll see that there was really no support up here. This was likely a very forced short squeeze because we can see that there was not a lot of conviction by the buyers because you don't see a ton of volume here relative to where most of it was holding. So what happens is, notice how quickly the price was able to drop because a majority of these people holding, in this big volume block, let's say, the average around 250, the average person was holding at over 200% profit. As soon as things start to turn, as soon as momentum starts to turn, everybody wants to get out the door at the same time to lock in as high a profit as they can. Well, if everybody's still holding profit from, a 200% move, it's very easy to just say, okay, sell it. I don't care. I was up 280%. Now I'm only up 200%. Enough people get that mentality, and you've got these very strong moves back down to essentially what I would call kind of like a mean reversion back to the break-even zone. So at this point, notice that we bounced right off this 360 zone because that's kind of where the base of the average person holding was forming, right around this 370. So, people very quickly went from this candle up 150% to back to literally break even within, a month. So as soon as all of those people go back to break even, they stop selling. That dries up the supply on the open market, and then you have supply and demand start to equalize, and that's where you've got this bounce into the last part of the month. So that's something that I wanted to show here just from a supply and demand perspective. One thing that I also want to show you guys too, I a lot of the time am not just using the volume by price. I'm generally using the anchored VWAP at some point as well. It doesn't always have to be anchored at the same point. Notice here, I anchored it from this 2019 low, and you can see how well price has respected this area as well. So, if we did have a down day or a down next 2 days, this would be the area I'm looking to see if price actually holds above. And from there, you kind of get an idea of what's going on. Generally, you'll have to go into some smaller time frames. So that is Tesla. I also want to go over Boeing for a couple different reasons. One of the reasons is clearly the anchored VWAP, which essentially I anchored from the, let me exit out a couple of these. There we go. Essentially, I anchored the VWAP all the way from 1987. So, and the reason I did that was because one, that's the farthest back the data goes. And then two, this was right around the same time we did have the 1987 crash. So it just kind of lines up nicely. And what you can see here is, notice that the anchored volume weighted average price from this point has acted as support, not perfect support, but overall pretty good support since 1987. So you can see we mean reverted back in 1993. We continued to move up. We then mean reverted again back in 1998. Same thing in 2001. And then we finally started to break down in 2003 before moving back up. And then notice we always kind of have like this movement around this average price. So it's not shocking to see that once we finally broke down and moved down on Boeing from March 2019 to this month, we moved down 80%. It wasn't shocking to find buyers finally at this general area that's always acted as kind of your status quo back to normal price. And what's really interesting is, notice how once we did test this level, the price was able to spike way back up right to above where most of the volume was holding. So I made this example in a podcast recently. It's kind of like you're jumping into the Dead Sea. If you jump into the Dead Sea, you can only go so far down before, the imbalance of, the salt water being so, whatever the word I'm trying to think of, buoyant, it kind of pushes you back up. And it's no different here. It's kind of like you jumped into the Dead Sea, you kind of went as deep as you're going to get. And then all of this volume kind of act as like kind of a buoyancy factor that pulled the price right back up, kind of right back to where we started. So notice here, this is a great example of, this was our quote unquote demand zone below, but just because it was a previous demand zone doesn't mean that we can't capitulate through it. And that's something a lot of people, have to understand is, and actually I need to move this, I anchored the volume weighted average price more or so from this March 2009 low. So same thing, we had a lot of that volume holding here. It wasn't as much as, from here, but generally if I'm going to anchor the volume by price, I want to anchor it from, a very big status quo change. In that case, the biggest status quo change we've had since the last month was in March 2009 when the downtrend reversed. And so I just wanted to bring that up. You can use these different things on, these different tools on not just monthly. You can use it on the 5-minute. You can use it on the 10-minute. This is kind of a fractal approach where you can use the same kind of strategy, not just in the monthly. It's also the yearly as well. I know we're running out of time, so I do want to hand it back over to you, Peter, to go over the last couple thoughts you have on some of these. But the last thing I want to mention about Boeing, notice we've got this huge candle down. Notice we had a very similar candle down in October of 2008 before we continued to resume the trend down. It doesn't have to happen like that this time, but I do want to mention that, just because you've got this really strong, what was kind of a hammer looking candle in 2008, does not mean that you can't continue down. So Peter, with that, I will hand it back over to you to end off this podcast looking at Tesla, GE, and BA. I mentioned GE, but I already went over it, so I'll let you go over that if you have any other comments.
All right, great. Thanks, Jake. So I will start with Tesla here. So you went through mostly monthly charts on these. Taking a look at the Tesla daily, there's some really interesting things with anchored VWAP and anchored volume by price. So what I've done here, I've taken that March 3rd candle, which has been so critical for so many charts, and I've put in an anchored VWAP. You can see that on Wednesday and Thursday, that anchored VWAP was pretty strong resistance and pushed Tesla back down. I also took anchored VWAP from the recent lows on March 18th. And you can see so far, one touch of that was strong support, pushed us up. And it looks very much, before I even layered in the volume by price, like we were going to get in a situation where we may see an anchored VWAP resistance above, an anchored VWAP support below. Next thing I did is I said, well, let's throw in some volume by price. And I took it from not the ultimate high, but from the second high, the kind of double top rejection there.
Yep. One thing that was the highest open though. So
yeah, yep.
I do the same thing. Because technically, I think we did hit a little bit of a higher high on that impulse move, but we did open higher on that one that you anchored from. So that's something I do all the time.
Yep. And taking that, you can see there's a whole lot of volume down here that briefly broke through there, but is now probably trying to build some support there. But it's a really interesting one, and one that I think could set up as a put trade or a call trade this week, or a short or long trade, because this was pretty clean resistance. It's coming back down. I also highlighted there's a massive gap here, right? That starts around 473 or so and doesn't fill till about 442. And the anchored VWAP's right in the middle of that. So kind of an interesting one. I think another rejection at the upper anchored VWAP with resistance would be a very interesting short entry to play back down towards the gap and the lower. But on the same, on the flip side, if we come down and let's say we get a tail that closes that gap and then a close back above anchored VWAP, that would be a very interesting long setup to play back to the other side. So one I have a very open mind on, but I think, one you can just let these, these tools here, the anchored VWAP, inform whether in the short term this is going to be a long trade or a short trade.
Interesting to see the MACD just crossed down there too.
Yeah, it's trying to cross there. Yep, it's trying to cross there. And TTM momentum looks positive, but it's does also look like it may be starting to flatten out.
Makes sense.
So that is Tesla. I know we're running short on time here. We'll look at Boeing next.
Gap.
You looked at some anchored VWAP from way back when on the monthly.
Yes.
But I'm looking here on the daily at some much more recent ones. Apologize for the slow transition here, but here we go. Let me just move this a little bit to a recent high there for the volume by price and then anchored VWAP. So two things. You can see down here on the anchored volume by price, we built a nice base, got a nice bounce. We're coming into a new area of anchored volume by price. But what was really interesting to me on Boeing, this is one of very few non-corona related plays out there that it's moved up through that March 3rd anchored VWAP. And so many charts came up to this and got rejected. This has moved up through that March 3rd, slowed down at the SMA 20, but be very interesting to see if this can start to build a base of volume. There is quite a bit of volume right at this level, and you've got anchored VWAP potential support right below. And look at that. We got a little MACD cross setting up as well.
Hello.
So
yeah, below. So bulls and bears have their targets at this point.
yeah, absolutely. So Boeing, very, very interesting chart. I have a feeling barring the market really pulling back here, this probably at some point has a lot more room up. But again, I'm going to just let this anchored VWAP here be my guide. If it comes down and holds, I think there's maybe a nice long setup. But if it doesn't, boy, then you get into, you've got some volume above, but no volume below until you come back to the lows.
Makes sense. Well, we are out of time, but what I want to do is I want to, go into the last slide here, mention your Twitter handle. If you have time tonight, maybe if you want to post your chart of GE, people can check out your Twitter handle and your account and start following you from there too.
I will do that.
Awesome. Well, I will go ahead and share my screen one more time just to show everybody the website. TheTradersPath.com is your website. At PLH Stock is your Twitter handle. And we also created a 30% off coupon code. So we do have the 25% off sale going on, but we do want to thank you guys for your time and add another 5% off. Please use TTP30 for that 30% off coupon code today. And Peter, it was a pleasure having you on. Thank you so much for coming on and sharing your knowledge and really how you're utilizing TrendSpider navigating through this crazy market.
Thank you so much, Jake. I really appreciate the opportunity.
Yeah, you're very welcome. We're looking forward to having you on again soon. And once again, everyone, we did run out of time, but we are going to try to post a few more charts tonight. So if you want to check those out, PLH Stock is Peter's Twitter handle. TheTradersPath.com is his website. If you have any other questions, please feel free to reach out to him or us. If you have a question about TrendSpider, hello@TrendSpider.com. And most importantly, hope everyone stays healthy and safe out there this week. Happy trading to everybody, and we'll see you on the other side.